Welcome to the second session of our Taxware Systems annual seminar. Again, if you didn't join us in the first session, I'm going to repeat some of this information just to make sure that you all have it. Number one, first and foremost, we are excited to be with you and kick off the new tax season by sharing a variety of things related to the Taxware program updates, new tax law changes, especially in this session, and how they are reflected in our programs, as well as just help you get to know the programs better. Like I mentioned, this is our second session for today. Our first session, if you were unable to see it, will be on our seminar page on our website, and that recording will be there before the end of the day. Um, this session is presented by Mike Nielsen. And we will have one more session this afternoon that is at 1 p.m. Pacific time. Luis will present again, entitled, Did You Know? Top 5 Wind Tax Program Features You May Not Be Using. Now, tomorrow is the entity program highlights as well as Protection Plus. So if you haven't registered for those, you will need to register for each session that you want to attend. So you can go to our website and update your registration or register for the first time if you need to. Now, in case you missed it, in November, we had 4 annual seminar sessions just a few weeks ago. And if you'd like to view those recordings, they are on the seminar page already, and they will also be on our blog so that they will stay there on our blog year round. Those sessions were TaxCom, Excellent, the Tax Book, Republic Bank, SBTPG Bank, and EPS and Refund Advantage. They all presented great information about their products and services. So that is where those can be found as well. Now, I always want to make sure that your email address has taxwaresystems.com as a safe sender so that you do not miss any email notifications from us. We try not to send too many, but as we know, everybody's email inbox gets overfull. But so what we do send is important. Um, we sent a newsletter just last week. And so if you have not seen that, please do go look for that and make us a safe sender in your email inbox. There is another training that's coming up in January. We call it the Detailed WinTax Training. And this is a time to do a deep dive into the WinTax program and really get to know all the details. So this session is also listed on our seminar page as well. We thank you for sending referrals your way. And if you have somebody that you know might be interested, please do share and make sure that they know that they tell us that you sent them to us. We have a gift card drawing for those that have sent us referrals this year that will happen during these annual seminar dates. So, well, without further ado, I'd like to remind you that the Q&A at the bottom of your screen button is where you could place some questions if any of those come up pertaining to the session that you are watching. And we'll likely answer them in the same Q&A area, or we may answer it live at the end of the session. There will be a prize drawing for this session that includes only those that have attended this session, and that is a $100 gift card sponsored by Refund Advantage. They have so graciously provided that for our annual seminar, so we're thankful to them to do that. I think at this time, I will introduce Mike. Many of you know Mike for many, many years, but it still bears repeating. Mike Nielsen, enrolled agent, vice president of Taxware Systems, with Taxware for over 38 years. Mike literally grew up in the tax business, starting in his father's California tax office while still in school. As a practicing enrolled agent, he serves as our lead developer for bank partner integration and chief director of electronic filing. Mike and his team build our powerful in-house tools that support tax compliance technologies, meet the needs of our clients, and adhere to IRS regulations. When he's not making e-filing smoother for thousands of tax pros, you'll find Mike fly fishing, kite surfing, or his favorite, spoiling his 3 grandchildren. Ladies and gentlemen, please welcome Mike Nielsen.
Hello. Thank you, Catherine, and hello, everyone. Um, yeah, we're going to go over the some tax changes this year, some changes in the program, and this year we have some new stuff to cover. So we're going to go ahead and jump right into it here. Um, and what we want to cover. So what we're going to cover today is we're going to go over, I like to go over just the adjustments for inflation. We won't spend too much time on those because they change every year. And then we're going to jump into the program enhancements. We did make some changes in the program, but also we did anticipate some changes that were coming from the IRS. So we didn't go overboard on enhancements, but we do have some enhancements in the program that I'll cover. And then we're going to look at what's new for this tax season, what's new, and then also how we are implementing those changes and some things to be aware of. And then when we get done with that, we are then going to spend a little bit of time just going an overview of the going through a tax return, and kind of how you'd go through a tax return. I'll give you some of my opinions on what I do or what I like and how I like to approach things. But anyway, we're going to jump right in. So let's start looking at the items, the adjustments for inflation. Um, so here's the table here. Standard deduction. This is I put in the last 3 years. So this is the current year. So like the standard deduction, it was actually it was going to be this the standard deduction was planned to be 15,000 for a single person, 30,000 for marriage filing joint. That got upped a little bit more with the one big beautiful bill, or OB3, I think is what a lot of people are calling it, which is a lot easier to say. So anyway, our new numbers here for standard deduction: singles 15,750, married filing joints the 31,500. The additional amounts for being over 65 or blind, those went up just a little bit, another $50. And then this is the additional amount for if you're married filing joint widower or married filing separate, goes up 1,600 if you're over 65 or blind, and then 2,000 for single and head of household. Um, the standard deduction, um, this standard deduction for a the dependent standard deduction, that went up just a little bit. That's where you get the greater of either 1350, which is the standard deduction, or the earned income plus $450. So that really didn't change at all. The next number here is the qualifying relative income limit. So that went up a little bit, was 5,050. Now it's 5,200. So this number here used to be what we would refer to, or what we would get as the exemption amount, which the exemption amount, we haven't had it for years, or at least the amount has been zero for taking the exemption. But this is the amount that the will allow somebody that qualifies them for the qualifying relative. So if they don't qualify as a dependent, and they meet the criteria of living in the home and providing more than half the support, then their income has to be under this amount, which is the 5,200. So those changed a little bit. Let's see. The tax brackets, most of you probably know tax brackets. They were supposed to expire this year, and they were going to go to 15 and 25% and whatnot. So those have kept the same as far as the brackets: the 10, 12, 24, 32, 35, and 37%. Those upped a little bit for inflation like they always do. So, if your income stays the same, then your taxes actually go down a little bit because you have less amount that gets taxed in the higher brackets. But so the brackets are there. We have the standard mileage rate. For the business standard mileage rate, it went up a little bit, up to 70 cents a mile. Um, Interesting how you may use the same card to go to the medical miles or charitable miles, but they don't seem to up those very often. But they do bring the update the business miles to adjust for the inflation and other costs. No changes on the IRA contributions as far as what you can make, what a person can contribute to an IRA. It's still the 70,000 if you're under age 50, or 7,000 if you're under age 50, and then 8,000 if you're over 50 for those catch-up contributions. Let's see. I always like to look at the on the earned income credit. So for a person, they can make up to $68,675 and still qualify for the earned income credit if they have kids. Um, and the max amount that people can get through earned income credit if they hit that magic number right in the middle, which I can't remember where that's at. It's probably around 25,000 now. I didn't really look at that, but if they hit that magic range of income, and they have three kids, then the earned income credit could be as much as $8,046. The child tax credit bumped up a little bit. So the child tax credit this year is going to be $2,200 per child for the qualifying children. The maximum refundable portion. So if your tax is already at zero, but you have dependent children, then you can have part of it refundable. The maximum refundable portion of the child tax credit, that didn't change. So that's still at 1,700. And then the other dependent credit for the if they don't qualify as a qualifying child dependent, but they still qualify because they live in the house. Um, but maybe their age is too high or whatnot. Then the other dependent credit, that's still at $500. So no change in that. Um, Other things to note, education credits. I don't know why they never update these, but there hasn't really been any changes. I think since it's come out, the American Opportunity Credit still maxes out at $4,000. And the phase outs haven't changed as far as I know. Those haven't changed. They didn't change the last couple of years, and maybe have never changed. So the education credits start phasing out at 160,000. They're gone at 180,000. So that hasn't changed at all. Feel like I get more and more people that no longer qualify for the education credits because they phase out of that income. Maybe both spouses work or whatnot, and so a lot of people, a lot more people that I see are not able to get that education credit because of the phase outs. Um, the child tax credit phase out, um, that didn't change. But that doesn't phase out until you hit 400,000. So that no change in the phase out period, but the increase in the amount did change a little bit, just to that $2,200. Um, the QBI, qualified business income, those bumped up a little bit. These are the phase out amounts, or when you start need to have some limitation if there's a qualified specified qualified business. I can't remember what the name of that was now. Uh, Specified service business. These are the limits on those. Went up a little bit for inflation. And then also here's the excess business loss limitation. So if you have a huge loss on the business, this is the max that you can take on it. That also went up for inflation a little bit, up to 626,000 for a married, or for everyone else, it's 313,000. Um, Let me see. Okay, so that was the notable things that I thought we'd go over on the adjustments for inflation. No big changes there. I mean, stuff we anticipate every year pretty much. So now let's start looking at some of the enhancements, the changes that we've got in the program. Um, one thing here we had a number of calls on this where people, they would go in and they're working on a Schedule C. This is the Schedule C input screen here. And then this is just a snippet of that screen covering the business use of the home, or the Form 8829. So when you do a Schedule C, you have the option of either actually doing a full 8829 where you put in The cost of the home, the utilities, the rent or the mortgage interest, the property taxes, everything in there, and then you put in the square footage of the room that's being used compared to the square footage of the whole house, and then it applies a percentage of that. So a couple years ago, they added the simplified method, which so the simplified method is not new. The only thing that I'm pointing out here is that now what would happen is that people would start the 8829 and then they'd go into it, they'd start it, not finish it, and then they go, oh, I want to go back and I'm just going to use the simplified method. And then they would be confused because it's not computing anything. The reason why it didn't compute anything is because you can only have the 8829 or the simplified method. And so if you went into the 8829 and started it, then the program would think that that's what you're doing is doing the 8829. And so it would ignore any of the input that you had down here in the simplified method here. So what we did is we just changed the wording on this to if there's an 8829 in there, then it's going to say down here that the simplified method for business use of the home will not be used because there is an 8829. So hopefully that'll save a phone call and you'll go, oh, that's why it's not computing it. And then it's just a matter of if you want to use the simplified method, then you just remove the 8829. Or if you actually wanted to do it, the 8829, then you click on it and you go and you fill out the information on that. Okay. Um, Another change that we did, and this is something that handful of times last year I was kind of bugged because I had to go pull the information from prior year. Because usually, if I've got somebody that I'm doing a Schedule C for and we're doing the business use of the home, most of that information is the same that carries over from year to year. So what we did is we added an option to recall the 8829 from the prior year. So what happens is when you go into the Schedule C, the program will ask, do you want to recall Schedule C? You say yes, and then it brings up this screen here and has a list of all your Schedule Cs if you have more than one. And then when you double click on that Schedule C, if you had an 8829 in the prior year, then you say, it says, do you want to recall from the prior year? You say, yes, I do. And then what it's going to carry over, it's going to carry over the area of the home information. So total square footage, what area was used for business, all the information. If it's a daycare business, it'll carry over the hours and the daycare and whatnot. Carries that over. Also carries over if maybe because of income limitation um, there was unused operating expenses or there was unused depreciation from prior 8829, it'll automatically pull those numbers over from the prior year 8829 into this year's, and then it'll also carry over the depreciation information because on the bottom of the 8829, you put in the the basis of the home, the date placed in service, and a couple other questions on there that in order for the program to compute depreciation on that 8829, and that'll all carry over. Also, it does carry over. I don't have a picture of the screen, but at the bottom of this of the 8829, there is a question. There's two questions that ask if you want to not carry the excess if you want to not carry the excess um, mortgage interest or property taxes back to the Schedule A. So typically, if you have the business in the home, you would go in and you would key in instead of putting your mortgage interest, assuming you have just one business. And then you're also going to do a Schedule A. You enter the mortgage interest on the 8829 in the business use of the home. That way it can use up as much as possible and hopefully reduce your SE tax. Also, maybe you don't even have enough to itemize, so let's use what we can over on the Schedule C to reduce that income. And then whatever's left over, what's not used for the business use of the home, would automatically carry over to the Schedule A. We do have an option to disable that, and that could be if you've got multiple um, It could be that you got multiple Schedule Cs and you're using multiple 8829s, and so it would double up or it would carry things in excess of what you need, and you double up on things. So anyway, we assume that if you did it the year before, if that's what you were going to set the you wanted it to carry or didn't want to carry, it would pull that over. So anyway, all that information carries over. So then the 8829, you would then just go into the 8829 and put in the new numbers. It doesn't carry the numbers as far as mortgage interest or other expenses or utilities and stuff like that. That would be new information that you would enter in. But we do have the recall for that. Okay. So moving into our next section of enhancements, I'm kind of curious to see what the highest. We're gonna have a poll that we want to do here to see what is the most number of box 12 entries that you've ever seen on a single W-2. So the box 12, in case you're not looking at a W-2, box 12 is the section that has they have different codes. There's a code D for a 401k or a code DD that that would be for the amount of health care that the employer paid for the employee. Whatever. There's code C, code W, whole bunch of different things on that. And so some of those boxes, some of those codes can affect or maybe will affect the tax return. And some of those codes are information, and the adjustments are already adjusted, made on the total wage or the taxable wage. So they don't make a difference on that. So anyway, our next enhancement I'll show you in just a second here when we get done with this. Give a minute to do for a poll. Actually, I guess we probably. So is there more? Do we share more on that, Catherine, as far as the Catherine's handling our polling for us?
No problem. So there it
Thank
is.
you.
The poll results should be shown. And it does show that quite a few people, majority had, 4 to 7 in the range of 47. I don't know if you see those poll results, Mike, but
Yeah, I do.
good. Okay. So it's just, everybody should be able to see those poll results. So they're kind of interesting to see. So I'll just stop sharing on that if that's okay.
Okay, sounds good. Thank you very
hmm
much.
hmm
Okay, so anyway, that moves into our next little enhancement. And that is that we used to have a limit. We would have 4 items of box 12 items on here that you would fill out. And we would get a handful of phone calls, and people would call in. They'd say, hey, my W-2 has 6 or 7, or looks like somebody had seen them where they had more than 13 um, on those box 12 items. And I think we're going to be seeing more box 12 items, not necessarily this year, but in the year to come. Anyway, I'll talk about that in a minute. But so and what we've had to do on that is we usually tell people, well, the code double D doesn't really affect the tax return. That's just information. So you can leave that one out. Some of the other ones, and so you'd kind of look at that and we'd try to, decide which ones you can leave out, because honestly, we fill out this information for the W-2 and we send it off to the IRS. But I think that when the IRS gets the tax return with the information of the W-2 on that, they're really going to be looking at the W-2 that came originally from the employer, not necessarily from the tax return. But it is a lot easier to just go ahead and fill it out and let the program decide whether it's going to affect the tax return or not. So we added an unlimited number of box 12 items. So you first fill out the first 4 here. And then if you have more, then you'll click on this box here on this box 12 overflow. And then it's going to come up with the menu here. And it'll show the first 4 that you entered in on the previous page on the main W-2. And then you start putting in the other codes. And this menu will just keep growing as you need it. And so as you put another one in, then it'll create another space for it. And so you can go ahead and put in all the box 12 items that are on the W-2, and you don't have to worry about it. You don't have to pick and choose which you don't have to pick and choose which one you're going to use on that. Which ones you need to put on the W-2 or which ones you can leave out. So, okay, so back to drop coming back to our W-2 input. The other thing that we added in here is, and we'd have the similar thing there, is that we had a limit to the number of states that were on a we had a limit to the number of states that were on a W-2, and we had a limit of four. And sometimes we get people that call in that have five or six or something like that. And in fact, um, In fact, let's see. I wanted to do in their poll because I wanted to see, and I'll show you. We'll do the poll, and I'll talk about this as we're bringing the poll up. But Catherine, can you bring up the poll? Let's do a poll of see what the highest number of states that you've ever seen on a W-2. I said single W-2 here, but I have seen sometimes where the employer will give multiple W-2s and everything will be blank. They'll get a second W-2 for the same job or same employee, and it'll have just the additional state information because the printed W-2 only has, I think, has two or maybe four, depending on what format it is. So I'm curious to see how many people, have run into where they've had multiple states on there. I haven't seen a whole lot of it. I used to have a client that was a bricklayer, and apparently he did the specialized work, and they'd send him all over the US, and he would get multiple W-2s from different, but usually that was different job would be paid on a separate W-2, so that never really was a problem on my end. But I know that you get if I understand it right, professional athletes they get a W-2 and they have to pay tax for every state that they go play in. So I could see where some of them looks like as far as what are polling right now, most people are seeing 1 to 5, a few on the 6 to 10. Looks like one person has gotten a W-2 where they've had more than 21. So that's a lot of work to do all those different state returns. But anyway, the similar to what we did on the we've got the states, the four states that you enter in here, which is probably going to take care of 99% of your clients. But in the few that come in that have more than four, you can now click on this button down here that'll be on the bottom of the screen here, and it's going to bring up a grid, same like the other one is here. As you start putting in the states, and it's the state and the local information. If the state has local taxes, then you can have the local withholding and whatnot. And you just start filling that out. And this is also unlimited number of states. So the menu will grow as you need more information on those. Um, okay, so that's our W-2. We'll talk a little bit more about W-2 in a minute because we got some new lines on the W-2 down here at the bottom, but I'm going to save that for maybe that's my next item. No, my next item is we added the 8911. The Form 8911 is the alternative fuel vehicle refueling property credit. Um, I don't know what other alternative fuel vehicle refueling property tax credit people are getting, but the only one I'm aware of is that for some people, and it seems to be somewhat limited, um, if you install a electric vehicle charger in your home and there's some limitations on that, then you can take a credit for that. Um, and it's either a personal credit, and you can get up to $1,000 when they say per port. So if you installed one charger that had two different ports or two different plugs to plug into two different cars, then you could take $1,000 per port. Um, if it's for business use, if it qualifies for this prevailing wage apprenticeship rules, then you can get 30% credit, or otherwise it's a 6% credit, and that can be up to $100,000. So a lot higher on that. And you put in the business use percentage, and then it applies that business use percentage. But here's the catch: is that it have to be in this low income community census tract or the non-urban census tract. It's kind of a it's not an easy lookup. I'll be honest. I had a client that was, asking me, "Hey, I did this. Can I get it?" And after going through and so I put in a link here where the a couple links here. So you have to go and you have to get this geographic identifier. I don't know. Geoid is what I called it. I don't know if there's a, but it's this GEOID. It's 11-digit number, and it has to be within this either the low income community census tract or the non-urban census tract. So you do have to, it's going to take a little bit of research to go find out where they live, to find out if they live within that area, if that code is in the list of qualifying areas, and if it is, then you go fill out the 88 no, the 8911, and you get a credit for the for the for putting in an EV charger for putting in an EV charger. Like I say, I had a client last year that we looked into it, and when I looked at the maps, he was, I don't know, a couple blocks away from an area that actually allowed it. So he was not entitled to it. So, but we did get a handful of calls last year that people had though had the need for that. So we added that this year. Looks like it's going to be in for this year for 2025, and then the credit ends, I believe, in the middle of next. I think about July. It's good through July of next year. So we may also see those in 2026 returns. So it'll be here for this year in the 2025 program, and then also it'll be in the 2025 or the 2026 program next year, and then I think that credit's gone. It's been expired or but anyway, if you need that, and last year it was e-fileable, but it was they only did part of it. You had to do part of it by a PDF and attach the PDF. But anyway, in 2024 program, we did not support it at all. But in 2025, the whole thing will be e-fileable. The whole 8911, and then there's a Schedule A, which is the actual one where you put in each individual charger. So 8911 is in the program this year. The way you find it is you go into the Schedule 3 input screen, and then down that, then in the line where it would go, it's listed as 8911. And then you go in there, and then you can fill out the 8911. Okay. One of the things that we added this year, and there's a couple of us in the office that started using. We've had a relationship, and we've kind of made available the tax book. And we've had a button. If you have the tax book, we had a button that would inside the program that would take you into their web library. Last year they added this what they call TaxBert. Uh, and TaxBert is their AI tool that looks at their research information, and it spits out results for you. Um, and so with a handful of us, I've been using the tax book, the actual handheld book for years and years. And and so then last year they added this AI tool part of their system there, and I started using that, and I said, "This is great." I think that I liked it. Other people liked it, and so what we did is we made an arrangement with TaxBook. And what we did is we added this button in the program so you can go ask TaxBook. So if you got a question, then you can go click on this button here. It will then open up a web page, and it'll take you right to the tax book website in the taxpert section. Now, the first time you go into it, and maybe even the first time in a day, it will you'll need to log into the tax book with the login information. And then for the rest of the day, it'll remember who you are. So you don't have to go in and log in every time. If you just keep your browser open, then it'll pop up, open up your browser and take you in there. Now, this is an add-on. It's an add-on program. Um, so it's not automatically included with the regular program. We made arrangements with them, and so if you buy it through us, you can get it for $2.99. That gets you the full web library. Normal price on that's $3.89. If you want to buy it through us, then you go to our store, which is the store.taxwaresystems.com. If you haven't been there before, which you probably haven't if you haven't ordered it already, then you would go in there and you create a new login. Even though you have a login to go to our normal website, you would have to actually do another login to get into the store. And then you can order it, and like I say, it's $2.99. Their normal price is $3.89. If you already have the tax book, if you already bought it, maybe you bought another package. They do have some packages where you get the book and the web library, then you would have access to it. You don't have to buy it from us in order for it, in order for this link to work. It's just, I don't know. I think this is a pretty, I don't know that there's a better price than this one here of the 299, but I won't guarantee that it's absolutely the lowest, but I'm pretty sure it's the lowest I've seen on what they've sent out. I get their mailings with their offers, and this is a better deal than I've seen. Anyway, if you want to buy it, you go buy it. If you have any questions, or let me show you a little bit on what it does. So the nice thing I like about the TaxBird is that you got the research information. You go look up, you got a question, but sometimes the wording of everything, they word everything to cut down on the number of words that they fit on a page, and so for me, seems like I have to read it and reread it in order to see where my client fits in. And with the TaxBird, the you can just talk to it like it's a person, like you're asking a friend. So, like in this case, I put in a question here. I have a taxpayer that has $150,000 in wages, is covered by a pension plan. His wife also works and has income of $160,000 and is not covered by a pension plan. So, what's the max they can put into an IRA? Both are age 51. So then it goes through and it tells you everything down here. And the bottom line says they can contribute, but none of it would be deductible as a traditional IRA. And then, so you go, okay. And then if you want to dig further, then it gives you links of where that information is. And one of the nice things about this, I mean, obviously there's other tools that you can do similar things to this. And there's Chat GPT, there's Grok, there's, I don't know, a handful of other ones that are out there. And you could do different questions on that. But the nice thing, the thing that I feel a little more comfortable about with the tax book item is it's coming from their resources. When you ask Chat GPT or Grok or something like that, it's going to go look at the web and it's going to get all these different opinions out there. And, based on information that it finds as it does the research or does searching for information on that, um, it's going to come up with it may come up with different answers on that. For example, I had putting together, double checking my the new standard deduction amounts and whatnot. I think I put that into Chat GPT and it showed me the pre OB3 numbers and not the current ones. So just that's the plus side that I like about the tax book is that it uses their resources and not just random things that somebody may have put on the internet. Anyway, so like I say, it is an add-on program, something that you have to pay for to have the access to that. But I think it's a nice tool to have to go do research on there to check on things, and the way it goes about giving you the answers is makes it really easy. The next thing that that we're an enhancement that we have is in our TaxCom tool. Now, again, TaxCom is also it's an add-on program, or it's an additional tool that's optional. But the TaxCom, so brief overview of the TaxCom. TaxCom is a tool that will allow you to communicate with your clients, have your clients send you documents securely, and then once you get finished with the return, then what you can do is, let me jump ahead a little bit and I'll come back, is that you can then submit to them a report of here's your tax return and here's the balance due. Does everything look okay? They sign off on it. And then they can scroll down, they can download the PDF off of this same screen here, and then they can go sign the tax return. So it allows, it's kind of an interaction inspired or started when we had the lockdowns for COVID and how we going to do tax returns. And surprisingly, I don't know if everybody's probably the same as me. Um, Once I started doing that with clients, giving them an option to not come into the office, then a lot of them that don't even live very far away, they still choose not to come into the office and they just send me the documents. So anyway, so this TaxCom program is a program to facilitate that. And some of the nice things that we've got coming in TaxCom is that when people load up documents, a lot of times they just take pictures of documents. It's got the same name on it. You have no idea what it is until you open up the document. And then you're trying to sort through those documents, and some of the stuff they send you is junk and you don't even need it, and other stuff is information you need, but maybe it's not in the order that you want. So one of the nice things that's coming in TaxCom is that we've got an option in there where you can have TaxCom will read the documents that come in. It'll read the documents. It'll use the document intelligence here, and it'll decide what information uh, is there, and it'll give you, so then it'll be able to determine whether it's a W-2 or it's a 1099-R, or there's a handful of different things, and we're just going to be adding more and more to this, where it'll and then organize the documents so that you'll know what they are before you even go into them, and then you can go into them, and then it will also gather the data, parse the data for maybe like a W-2, and then we have a tie-in that will tie in the TaxCom back to the tax program, and you can actually have it send the information in, for a W-2, and it will basically input the W-2 for you, so you won't have to input the W-2. The other thing that it does is it does some prior year document matching, where it looks at the prior year information, and and I know, like, I always go through, and if on the Schedule B, I want to, if they had four 1099 INTs from four different bank accounts, and they only have three when they come to me, I want to know what happened to that other fourth one. So I ask about it. So are we missing it, or did that bank account close or whatnot? So it's going to give some information on that, where it'll say, oh, you may not have all the information because the prior year you had four Schedule B items. This year, so far they've only uploaded three. So, uh, so we've got a lot of AI tools coming in the TaxCom program. So it's going to be really nice. Um, okay, so now let's talk about some of the what's new. Um, so these are the big things that I'm going to cover on what's new. IRS has a new 1099 DA, which is for digital assets. We'll talk about that for a minute. We have, everybody's probably familiar with this, the no tax on tips, the no tax on overtime, no tax on car loan interest. There's the enhanced deduction for seniors, or what I think is erroneously advertised as a no tax on Social Security. And then there's the increase for the Schedule A, the state and local taxes, and then also the no paper refund checks. So we're going to talk about each one of those. We're going to go through each one of those. So starting out with the DA, here's the 1099 DA. 1099 DA, it's got a lot of information on it. I think if we see them, I don't know if we're going to see a whole lot of them this year. But they will be out there for 2025. Basically, the 1099 DA is really not much different than a 1099B. So we may have the alternate variations of the form, just like you get from the brokerage statements. So we don't have input for the for where you go out now. I'm going to enter in a 1099 DA. I go to the input screen for that. We don't have an input screen for it, just like we don't have an input screen for the 1099B. Um, so, but it is you are going to report it just a little bit different than a 1099B, and that's going to be typically it's going to have the number of units, the code for the digital asset, the name of it, the number of units, the date it was sold, date acquired, date sold, the proceeds, the cost or basis if they have it, and then the kind of interesting that they have on the form, whether it's short term or long term. Um, and then I think you need to be very conscientious on these because with the digital assets or the cryptocurrency, people transfer things back and forth between different wallets and whatnot, which doesn't necessarily constitute a sale. And whether the basis follows any of those things is probably questionable. So, um, if you have people with digital assets, be aware that there's, a little bit to it. Um, my son works for an accounting an accounting firm, and big part of their business is tracking the basis for these people that are buying and selling thousands of transactions a year, and and they charge big money to track the basis on things. So, um, anyway, if the exchanges are going to start reporting this will be great. But I'm not confident that it's going to be great information, at least not in the beginning. Anyway, the way you're going to report the 1099 DA, you're going to go to it's going to be a Schedule B, a Schedule D item. And here's the normal Schedule D item. You put in the description, date acquired, date sold, the sale price, what the cost is. And then the only difference on this, other than a regular, stock sale or a mutual fund sale, is that when you get to this section right here, and this is going to determine where it goes on the 8949. So the 8949 has all the transactions, and then it gets summarized based on these different categories. And so there'll be an 8949 for each one of these categories if you used them all. And then those carry over to the D. So what they added were it used to be 1, 2, and 3. Those have always been there for several years. They added the 1099 DA basis was reported to the IRS. The 1099 DA basis was not reported to the IRS, or the 1099 DA was not received. So they added those 3 items on there for the digital assets. Other than that, I think for most of the time, it's just going to be a straight Schedule D item. You put it on there when it was bought, when it was sold, the cost and the sale price, and it's going to carry over to the Schedule D and determine whether it's long term or short term. I don't have any screens for it, but there are other things just talking about. I don't know I didn't really see where it's going to show on this DA, where it would show things like, oh, what do they call them? Well, there's like staking income where you can get money coming in, which goes on as ordinary income. Um, so I don't know that I didn't really see a place where necessarily we're going to see that. I think that it might be on a 1099 miscellaneous. Um, but if that's the case, that would go on if you have other income that's not a sale of an item, it's just uh, a prize or a bonus or the staking rewards, then it goes over into the Schedule 1, and there's a place for digital asset or income from digital assets as ordinary income. Okay, so that's 1099 DA. Next thing on the list is the no tax on tips. So the no tax on tips, it's eligible for workers up to exclude, and it's not really exclude. I should have changed that to deduct up to $25 in tips. Um, the exclude kind of sounds like you get to just leave it off the tax return, but you don't. It's included into the AGI, and then it's deducted back on, I think it's on page 2, but it's right next to the itemized deductions or the standard deduction. So it's a deduction. Anyway, you can exclude up to $25,000 in tips. It's effective from January 1st up until December 31st of 2028. So for the next few years, we'll be able to deduct tax on the tips. It applies to tips reported on the 1099 or the 1040 on the W2. That should be W2. Sorry. 1099 or the 4137. Um, Now, here's the eligible workers. You have to make sure that the person that is getting tips is an eligible worker. So you can't just all of a sudden turn all your employees and pay them nothing and then give them huge tips at the end of the week. Give them tip income. So they have to be eligible workers. So servers, bartenders, hairstylists, delivery drivers, taxi drivers. IRS has it. If you go to the IRS website, they have a list and they have a little more detailed information on who qualifies as eligible workers. You do have to have a social security number, and if you're married, you have to file joint. So if married filing separate, you don't get the deduction. Only if you file a joint return if you're married. And then there is a phase out. The phase out starts at 300,000 for married filing joint or 150,000 for single. And then it gets fully phased out at about 550,000. There's not an actual number, an exact number on that because other things come into play, but the phase out does start at 300,000. So it does no tax on, people aren't going to pay income tax on the tips as long as their tips is less than 25,000 and their income is under the 300,000 if married and they fit into one of these categories, the eligible workers. Um, so that's the tax on no tax on tips, and I'm going to cover the input on it in a minute. The next thing here, and this is going to be a little bit of work for us, at least this year, as preparers. Anyway, there's a deduction of up to 25,000 for married filing joint, half that for single, of the overtime premium. And there's the catch is the overtime premium. We'll talk about it in a minute. It's effective for the same time period from January 1st of 2025 to December 31st of 2028. The only thing that's deductible is the overtime premium. So the overtime premium is the extra half and a time and a half. So if somebody works, they work 48 hours in the week, so 8 hours is their overtime pay. On that overtime pay, if their normal wage was $30 an hour, but on that one day of overtime, they're going to get 8 hours of time and a half. So the time and a half is $45. So the regular pay is 30, the time and a half, so they're getting paid $45 an hour for that last 8 hours. Only the extra $15 per hour is deductible. That's the premium on that. Okay. So I think that people are going to come in and they're going to go, oh, they're going to come in with their pay stub and pay stub's going to show their regular hours and their overtime pay, and their overtime pay is going to have a dollar amount in there. And they're going to have the expectation that they're going to deduct that whole amount of that. But that's not the case. And it's going to be even tougher if we're trying to figure out, like, if they have overtime pay and maybe they get paid time and a half if they work on weekends, or they get double time if they worked on certain holidays. But it's just the premium amount. It's the amount above and beyond their normal hourly wage is the premium amount. So this year, I talked earlier about that box 12. in 2026, uh, the employers are going to report that, and I'm pretty sure that it's going to be reported as a box 12 item. They'll have a code for it, and then they'll have the dollar amount on it. And when they start doing that, then the program's going to be able to just take that code, automatically carry that over to the Schedule 1A, and it's going to take the deduction for it. It's going to be easy. Um, this year, I don't think any of the employers, if they do report it on a W-2, I don't think it's going to be on the box 12 because I don't think that IRS has a valid code for it right now for 2025. So we're probably going to be looking at pay stubs, and then we try and figure out how much of that it is. I don't know how the IRS is going to validate this information. I guess maybe uh, unless it's looking unrealistic, they'll probably just accept the how we figure out the numbers on that. So uh, yeah, just keep in mind that it is the overtime premium. So anyway, you must have a social security number. You have to file a joint return if you're married, and it has similar phase outs where it starts at 300,000 and 150,000 for the single. Okay, so the input on these two items for the tips and the overtime income is most of it's going to be done right on the W-2 for each W-2. So we have a line down here for the qualified overtime compensation. Okay, so the overtime it ought to be it's automatic. It's already going to be in box one. It's going to be included on that. So it's the qualified overtime compensation. So it's the qualified overtime. Maybe we should put in there the overtime premium included in box one. Um, but that's going to be the amount that's going to be deductible. So that's where you're going to have to get the pay stub out and out of what they have on their W-2 and then look at the pay stub and say, okay, this is the amount of the overtime premium, and you'll enter it in on this line right here. The tips, uh, the tips, I think that most of the time that if they have reported tips, then the reported tips are going to show up on this Social Security tips line, but we're not going to automatically pick that up because the preparer needs to determine whether or not it's a qualified individual and whatnot. So then what you'll typically, I think that we're going to be able to, any of the reports that they that the employee reported will show up on that line, on this box 7 line. And so I think that we, in most cases, we can carry it down and put it down into this qualified tips line. I guess this is I put a bigger picture of it. I don't know which one's easier to read. This is kind of blurry. But anyway, so that's going to carry, you put those on there for each one of the W-2s. It'll carry over to the Schedule 1A. Um, and then it'll be included in the tax return. If they have allocated tips, then they probably need to do that form 4137, which is the non-reported tips. And then the program will also pull in the a dollar amount from the 4137, and then you put in the qualified amount. Um, and then that is also will add in there too. But on this input right here, we're not automatically pulling in the allocated tips because if there is allocated tips, that's just kind of a trigger that maybe you need to do the 4137, but you'll do that as a separate form. um, okay, so the next thing on the Schedule 1A is the no tax on car loan interest. So you can exclude up to $10,000 in vehicle loan interest, and that applies to loans originated after December 31st of 2024, or that's the wording that they have on there, but pretty much valid from 25 to 28. But here's the limited to passenger vehicles with final assembly in the US. So you have to go look up and make sure that the car has the final assembly in the US. And the IRS has a lookup on that. And then you have to have the VIN. Um, and then you'll enter in the VIN, and same thing like the others. If you have to have you have to have a social security number. If you file a joint return, I mean, if you're married, then you have to file a joint return in order to get the deduction. If you're married filing separate, you don't get it. And then there's a phase out starting at 200,000 for married and 100,000 for single. So the catch on this is that the it's only available to vehicles with final assembly in the US. So they have rules on that, and I think that there's lookups to look up to find out which vehicles qualify for it. um, okay, so all of these things are going to go over, and they're going to carry over, or going to be reported on the Schedule 1A. So access to the Schedule 1A, either from the forms and schedules or the line input menu, you're going to go into the Schedule 1, which is the other income and whatnot. And then right at the top, there's the Schedule 1A, and you can go into the 1A. Now, and a lot of times you won't even need to go into it if you entered in from the W-2 and there's not adjustments that need to be made, then it'll just carry in. So we do have this carried in here. If you didn't put it on the W-2, you can just put it on this adjustment line. So this adjustment line here, you could put a positive number or a negative number. Um, and then this would be the adjusted value, and that's the value that's going to compute the deduction of. That's for the no tips. And then this is the amount coming over from the 4137. That's going to pull in automatically. And then you can also get qualified tips received in the course of a trade or business. So I think that'd probably be, I think, common. Well, delivery drivers, Uber drivers, or delivery systems, or a lot of times hairdressers and whatnot. That income's coming over on a Schedule C. So the income would need to be reported. I saw some little note on there and they said, well, the catch on that is that you have to report it. Well, you're supposed to report it anyway, but, but, but yeah, obviously it's already going to show up on the Schedule C in this case, and then you're going to put that in there. And we don't have any input on the Schedule C to put in the qualified tips. So you would need to come into this Schedule 1A and then put in the amount of the tips um, on the Schedule C. I mean, that apply to a trader business. Put that in there. Same thing. No tax on overtime. Again, we're going to pull in whatever you put in there on there, and and then you can have an adjustment to, or the override the amount on the no tax or the no tax on the overtime. And then in some cases, business income can qualify, and that would be information that's coming off of a 1099 NEC or 1099, and you'd put that dollar amount in here. Here's the no tax on the car loan interest. So what's required on that is the VIN. If you deducted anything over on the Schedule C, E, or F, then you'd put that in there. So if it's a business deduction and there's a percentage that's, business use percentage of the vehicle, then you'd put in the business use percentage that's put here, and then the amount that you're actually going to deduct on the 1A. And this is going to be actually have the deduction. Because obviously, if you've already deducted the interest on the Schedule C, then you can't double it up and take it on the 1A as well. So that is the 1A. Um, oh, not entirely the 1A. There's also the enhanced deduction for seniors. And this will be automatic based on their age and the filing status, but there's the enhanced deduction for the seniors. And I think this is the one where basically they're making it sound like there's no tax on Social Security. So whether it zeroes out your tax on Social Security or not, but it's really not tied at all to Social Security. But you do get a $6,000 deduction per eligible individual age 65 and older. It's going to be good from 25 to 28. Same rules on the Social Security and married. This is going to this is going to be in addition to the standard deduction or the itemized deductions. So it's not just a bump in the standard deduction. So if you itemize, then you can still itemize and then still take this extra enhanced deduction. It does have a lot lower phase out. So at 150,000, married filing joint, it starts phasing out. 75,000 if single, and then it's fully phased out at 250,000 and 175 for single. So the phase outs are a little bit lower. So like I say, if somebody's got other, fair amount of income coming in and they got Social Security, then they're still going to be paying tax on their Social Security. So, but I don't know why they pushed it as a no tax on Social Security. Anyway, the program will automatically compute the just like it does on the standard deduction for the extra amount for the being over 65 or blind or whatnot. The program will just automatically compute the enhanced deduction for the seniors and put it on the Schedule 1A. Okay, I've got a poll. I'm just curious to see, and I think that the kind of leads into our next section here and whether or not we're going to see more itemized deductions for the upcoming year. But I know that over the years, over the last few years, ever since the itemized, the standard deduction has jumped up to 30 some odd thousand, that I have fewer and fewer people that actually qualify for federal itemized deductions. We're in California, and so a lot of times we still will do the itemized deductions for state purposes, but not the federal. But kind of curious to see how many people still, the percentage of people that are itemizing or qualify for the itemized deductions. But we'll go we'll let that poll run for a little bit, but let me just go ahead and jump into the next section. So that kind of fed into, I don't know if this is going to increase. I guess it depends on where we're at and what the property taxes are in the states and the areas you're in. Um, but the next thing is that the state and local taxes, the cap used to be $10,000. So they've bumped that up to $40,000. So a lot of people that have high property taxes or high state taxes, then they're limited, and and that I think had a little bit to do with cutting down on the number of people that could itemize. So once we get now you jump from 10,000 up to 40,000, I think we might see more people that can actually itemize on the federal side and take the benefit from it. So this is going to be from 25 until 2028. So we'll have it for whatever the next 3 years. Um, the it's only beneficial if you itemize exceeds the standard deduction. Okay. Um, and the program will automatically take the better of the two, but it takes that into account. There is a phase out starting at 500,000. Um, and then the phase out starts at 500,000 for married filing joint. If your modified AGI hits 600,000, then you're capped out. You're capped out at the 10,000. So your deduction based on anywhere from 500 to 600,000, then it's going to reduce your 40,000 depending on how far over the 500 you are up until you hit 600,000. Then you get the $10,000 deduction. Okay, so that's the input on that's going to be no different. We've always just put in the total amount, and the program has the limit it to 10,000. So it'll do the limits. It'll do the limit to 40,000 now, and it'll do the phase outs within the program. Okay, the next thing is the IRS has indicated, I guess it's not the IRS that determines it, but it was this executive order 14247 that basically said that they're no longer going to be issuing paper checks. So I don't think there's a hard, direct, exactly. There's absolutely no paper checks, but they will hold the refund for 6 weeks. And then supposedly in that 6 weeks, you're supposed to be able to go into the IRS website and probably have to go into your IRS account, which hardly anybody does do that. But and then update their direct deposit information. So anyway, we've added a warning as that we have a e-file warning that we've added into the system. It'll show up as yellow, so it'll still allow you to e-file the return, but hopefully we'll catch it because it's going to come up with it just comes up with a little warning, yellow warning, and I'll show you later when we get into the program if you stick around. Um, the where it's going to show the basically it's where the validity check is, and it says up you might have this, and it's going to warn you that you don't have direct deposit on this return, and the IRS is going to hold this. You're going to delay the refund for 6 weeks. So push to get people. I know I've got some people that they're just anti direct deposit and they don't rather get a check, but I don't think they're going to wait 6 weeks. So they'll probably give me their bank information to do a direct deposit. But most of the people are already doing direct deposit anyway. So I don't know that it's going to be a big problem. There is probably going to be a problem for the clients with no bank accounts. Um, so that may be an option. Um, it may be an option. A good solution to that could be a bank product. Where the bank products are basically we partner with three different banks, Republic and EPS. Actually, I guess it's technically four: Republic, EPS, Pathward, and Santa Barbara or SBTPG. And so what they offer is a bank product where they route the money. The money would then be direct deposited to the bank. And then once the bank gets the money, then they would authorize the preparer or the office to then go ahead and print a check. But that wouldn't be considered a check as far as the IRS is concerned because the IRS is doing a direct deposit. So of course the bank products, there's a fee that goes along with that, but it may be worthwhile as opposed to waiting for 6 weeks for the IRS to issue checks. And I don't know if that I didn't look into it. I'm curious, and just thought came to my mind right now is that if you do a return early in the year, the IRS is going to hold the refunds for anybody that's getting EIC until middle of February. I'm going to guess that that 6 week period is not from the time the return was filed, but it's when the time that the refund is supposed to be issued. So any of those delayed refunds because of EIC that are put off till the middle of February, that's probably going to start the 6 weeks from that point on. Also on the I work with the bank products, and I do see a lot of I don't with the IRS I wouldn't have any idea of how many failed direct deposits there are, but with bank products you can have the option to get the bank product, and then once the money goes to the bank, then you can have the bank deposit the money directly into the client's bank account. And we do see some stats on that the final bank account or the ending bank account, the bank is not able to direct deposit it to that account because there's a problem with that account number, whether it was entered in wrong or something like that. So um, maybe, you know, take extra caution to make sure that you're getting valid direct deposit information, because it's really going to delay refunds. And then clients call you and want to know where their refund is and expect you to be able to find out exactly what's going on with it. So anyway, no paper refund checks is going to be probably something that's going to come up a lot. Well, definitely going to come up a lot, but it may be an issue. Okay, that is what I really wanted to cover. So that was the new changes in the program, the enhancements, and what we can expect for the new year. So the next section, and I guess I'm those that want to stick around, feel free to stick around. I'm going to go over going through the program a little bit and kind of point out some things on doing a tax return. If you're very familiar with that and you want to and you don't want to listen to or don't feel a need to stick around for this, I won't be offended. But thanks for attending. But this is what we're going to cover now. Is we're just going to go over kind of doing a return, the flow of everything, looking at wage statements and other income and whatnot, and some of the common things that come up in doing a tax return. So if we go on the so starting a new tax return, this is the main menu or the beginning menu where when you first start the program up on the individual tax. So there's three options here, which is new client, recall client, and prior year client. So what this is, the new client is I'm going to do a new client that I haven't seen before. They haven't come in this year and I don't have their prior year data. I'm going to click new client. Um, the recall client is I've already started this person's tax return. I'm just going back into that tax return and I'm going to make some changes to it and finish it up, hopefully. And then the recall prior is client comes in, haven't seen him since last year. So, hey, welcome. They come in. I'm going to recall the return and it's going to pull the information from prior year. Okay. We have three options on this screen, and some people use all three of those. I personally only use this one button right here, which is the recall current. And I'll show you why. Um, so this is, if I say recall client, it comes up with this menu here and it has a list of my clients on here. These buttons right here will indicate what I'm going to look at in this grid here. So I will usually just keep it clicked right here as all. So it'll show all my clients. So it'll show my current year clients and my prior year clients all on the same menu. And all I have to do to go find the client. So I click in here, I'm going to all, I'm going to look in Mr. Hill came in. Now this is one that I've already done, but then I just type in for the full names, I just type in Hill and I can just type in HIL and then it'll show me just the ones that have HIL either in the first name, the last name, or the spouse name. And then I can just double click on it. If it's a return that I haven't done, if it's prior year, then it just automatically recall the prior year and then I'm in the return. If it's one that I've worked on and I'm just going back in, then it just opens up the current year return and does it. And then even if the client comes in, he's not on my list because I've never seen him before, then I can click on new client right here. I can hit the new client button right here. So I just like this off this screen right here instead of trying to figure out whether I want to use, just going back here, okay, do I want that button, or that button? I just go to this recall client, this one here. I use that. That's the only one I use. And like I say, I can say all, and then I just type in the client that I want, type in the name, and then it shows up. Maybe I've got three or four hills, then I find the one I want. I double click on it, bring it in there. Um, okay, so that's once I've recalled the client, then it takes me to the basic information menu. Basic information menu, I think is pretty straightforward. Name, address, city, state, zip. I think everybody's in the habit of just putting in the date of birth on here. You can put the age, but date of birth is much more accurate. Get their, first time you see them, get their birth dates. And whether or not it affects the tax return, a lot of times it doesn't affect the tax return until they turn over 65. But if you just get it right from the beginning, then you never have to ask them for it again because it's going to carry from year to year. Same thing with the dependents. If you put in the date of birth in there, the date of birth does need date of birth in order for it to figure out whether or not you're going to get the child tax credit or if you're going to get on EIC and whatnot. So get those. So basic information, the one, I don't have a picture of it, but take a look at be aware that there's a special filing categories and it's down on the menu right below this one. Or just as you scroll down, special filing categories, it has a situation where you indicate that you're a dependent of another or or if it's a must itemize situation. There's a couple new sections, things in there on that dependent information or not under the special categories, special filing categories for the combat zone. If you've got a client that was in has non-taxable combat pay, then you indicate the combat zone. But anyway, basic information. Then off this basic information menu, over to the left here, there is the menus to navigate throughout the program. So basically the program has three main sections of it. There's the basic information, which we're sitting at right now. And then there's either the line input or the forms and schedules. And that is where you're going to put in your W-2s, your interest income, your deductions. Everything is going to be either on one of these two menus, just depending on your preference of whether you like the line input method or you like, or if you like to go to the line, I'll show you in a minute. And then there's the summary, which the summary is where you're going to put in the billing information. You're going to print the tax return. You're going to finalize the e-file information. So you can navigate back and forth. So if I jump into a return that I've already done and I just want to e-file it, I can just jump right to the summary menu, click on that. It bypasses the calculations because I don't have any new information. It's already calculated it. Okay. So here's the back at this when we had the line input and the forms and schedules. So we have two different input screens depending on what your preference is. We have the line input, which we kind of make it look a little bit like a 1040 form. So you got the wages, the tip income, you got IRA distributions, pensions. Down here, you got the adjustments to income. This is Schedule 1, and so on down the line. If you're familiar with the 1040, this might be the way to go. And you go, okay, I'm going to do my W-2 wages and whatnot. And some people like this one here. The other one is the forms and schedules. And the forms and schedules is where you're just picking, like, okay, I'm going to do a W-2. So I go to the W-2. I'm going to do a 2441. So if you're familiar with the numbers of the forms and the form names and whatnot, sometimes the forms and schedules is a little easier. I find myself jumping back and forth more and more. I used to be like exclusively just forms and schedules. It's like just okay, I'm going to do a W-2. Now I'm going to do a Schedule B. Now I'm going to do a Schedule A, and I knew, did that. But sometimes I like to look at the line input, and you can jump back and forth between the two. It's not like you commit to one of them once you start a return. And like Luis, if you were Luis, the message in the meeting before when Luis covered how you can have the program default to your preferred method. So, okay, I prefer the forms and schedules. So then the program, as soon as if you go back at this menu here, which is the main, and you hit 99 off of this, then it'll go to whatever your defaulted method was. Either one of them, you can do a form search to find a form. And then also on these, you can also double click on the form that you want to go. Oh, I'm going to do the Schedule A, the Schedule 1. I can double click here and it'll take me into the Schedule 1. I think this is our last poll, but I'm curious the people that what's the preference of people whether they like the line input or the forms and schedules. And this seems to change. This seems I think I've done this poll last couple years at least, and it seemed like we got more people that used to be the line input. Then lately, last year, I think the forms and schedules beat out the line input as well, and it looks like the forms and schedules is also beating out the line input. Yeah, I have it defaulted to go to the forms and schedules, but then depending on what I'm working on, I will just switch it within the program because you can just go if you're in the line input menu right here. I can just go up to here, click on it, and say forms and schedules, and it'll take me to the forms and schedules menu. And same thing if I'm in the forms and schedules, I can go back. Okay, so it looks like forms and schedules is the winner at 55% compared to 30% on line input, and then 15% are usually a mix of both. So yeah, there's either one. It doesn't matter because it doesn't matter whether you start one or the other. Because if I get to the W-2 screen from the line input, or if I get the W-2 screen from the forms and schedules, it's the same one. So it's easy to switch back and forth. Okay, let's talk about wage statements here. Obviously, W-2s, you just add a W-2 or add a 1099-R. Um, In the 1099R section, just be aware that there is a little checkbox where you can say this is an RRB 1099R, and then it'll reformat the screen so it matches what the RRB 1099R is. The RRB 1099R is the railroad retirement 1099. Um, and the information, it still gets reported to the IRS as a 1099R, but the railroad retirement has their own little format, so it's easier to read if you switch it to the RRB, so you match it up. The W2G is the gambling income. Not much to cover on that. 1099, we've got the whole 1099 section right here. We allow you to input the 1099 miscellaneous, the NEC, and the K. Um, as you enter that in, you can tell it where if you want it to carry over to the Schedule C, or if you want it to carry to other income, or if you want it to carry to the miscellaneous other income, on the front page of the 1040. Um, we have input for the 1099, all these miscellaneous NEC and the K, but the detailed information for these forms does not get filed or transmitted to the IRS. Um, this information is just a tool to carry it to help you keep track of it. So I personally do not enter very many, if any, entries into the 1099 miscellaneous. Usually, I just look at the 1099. If it's a 1099 NEC, and if I'm doing a Schedule C, I just go straight to the Schedule C and I put the income on the income line, which may or may not match the 1099 NEC because they could have other cash income that isn't reflected on, or they have different payers, people paying them, that doesn't reflect everything that's on the 1099 NEC. So unless there's withholding on any of these forms, which is kind of rare, then if there is withholding on it, then it will report to the IRS the EIN number where the withholding came from. So if you do have withholding on a 1099, then yes, I would definitely put it in this section right here. That way, when it goes to the IRS, they get the EIN associated with the amount of the withholding. So it's going to match up. But I personally don't put in the 1099 information on that. And years ago, I would argue it was never needed, but we had a lot of people that like to enter it in, like to keep track of it, and so it does track it. It does keep track of that information on there. So just keep in mind that unless you have withholding, a lot of time this 1099 miscellaneous or 1099 NAC and the K is all is kind of optional and doesn't really give any more information to the IRS. The 1099K. Looks like they keep on reverting back and forth. I think we're back to the point where the 1099K is only going to be issued to people with, I think it's $20,000 of income or 200 transactions. I can't remember what the new numbers are. They seem like they flip flop this over and over. And there's this big worry that, oh, we're going to, every client that used, whatchamacallit, Venmo to, you know, send money to their friends are going to get a 1099K. So I don't think that's never really been an issue. We've had these scares that it's going to be an issue, but I don't think it is. If it is on the 1099, on the 1099K input, we still have the input on there where there's a place to put in where it's not, we want to report it. So it gets recorded on the other income and then take it back out to say that it's not taxable income. We do have the input on that for the 1099K. That'd be another reason to report the 1099K if you got one that was basically what they say in error. So you're not in the business. It was just a reimbursement. So that's not taxable income. Okay, Schedule A. Schedule A is pretty straightforward, I think. Broken down in the medical taxes. The You put in the total amount. I kind of like this if I'm sitting in front of a client. So I get to the Schedule A and we go, okay, what do you got? And I say, okay, based on your income, I like to look at this little section right here. And I say, okay, do you have medical expenses that are, you know, close to or more than 3,700? And a lot of times the answer is going to be, oh, no, no, don't. But it's a good, nice guide to have here, to have it on the screen here. This is an old, this is old before we had the cap on the, actually it is just $10,000 straight. But anyway, this would show the allowable deduction here, even though you put in the total amount for the state and local taxes um, in this section here. So that's the medical and the taxes, the interest, the mortgage interest. We have on this on the Schedule A, we still have this mortgage insurance premium. It's not deduction, but there's some states that allow it. So we do while you're keying everything else in. It's just easier to put it in right here. If your state allows it, then it would carry over to the state. But on the federal side of it, you're not going to get it. Contributions, the charitable contributions, we give you a handful of descriptions here. The other items, if you want to fill out, there's, I think, 20 items on there. Um, we do still have, I don't have a picture of it, but the next if I page down, the next section of this screen would have the miscellaneous itemized deductions subject to 2%. It's not a deductible item on the federal side of it, but we leave it on the Schedule A because states like California still allow the miscellaneous itemized deductions. So it's still on the Schedule A. You fill it in on the federal Schedule A. Federal program is going to ignore it, but it'll carry over to the state if the state still allows miscellaneous itemized deductions. So if you're keying that in, you're like, wait, it's not showing up on the tax return. Well, it's not going to show up on the federal side because it's been disallowed. And actually, I think that that's now permanent with the new, that OB3 that, well, permanent until they vote on it to change it, I guess. Nothing's permanent, I guess, in taxes, but they call it a permanent change. It was an item that was set to expire, and now it doesn't have an expiration date. So until they decide that somebody wants to bring it back and vote on it, then I guess they could, but there's no timed schedule for it to come back. Let me see. Schedule B, the interest and dividends, pretty straightforward. You add each item, dividend item or interest item and dividend item. The Schedule B, I like to go through, even though I have somebody that comes in and they've got, $27 of interest from their escrow account, and then they've got $11 from their savings account. Schedule B is not required on that because it's less than $1,500. I could go over to the overrides and just put it in there, but I like to have a list of the Schedule B items there and I can compare it to last year. And then I look and I say, oh, wait, we don't have that one. I like to make sure, keep track of those things. Same thing with the dividends. Dividends, when you get into the dividends, you gathers all the information right off of it's kind of geared towards to follow a brokerage statement because I think that's where we see most of the dividends on there, where it has the dividends, the qualified dividends. It'll have the 199A dividends, which would be the QBI or the qualified business income for that deduction. The So that's Schedule B. Schedule D, I kind of covered the Schedule D a little bit on that the change for the upcoming year. Something on the Schedule D. A lot of times, if somebody has just one brokerage statement, and you look at it, and they have a summary page on there, and it says that the basis was reported to the IRS, then you could ignore the 10, 15, 20 pages of transactions that go through each one of the transactions of every buy and or every sell that they had during the year. And you don't need to enter that in there. The IRS, if the basis was reported on the 1099B, then you just report the sales price, the cost, and then the gain or loss. Um, if you have, you can't necessarily do that. If you have adjustments, like the common adjustment is like if they have a wash sale, and it'll be on the summary page where they have the sale price and the cost, and then they'll have this wash sale adjustment, which that you'd have to put in a transaction for. And I don't know, I've never had a problem with it, but typically what I do on that is I don't go through and still enter every single transaction to identify which one had the wash sale on it. I just put it in as one transaction, indicate that that the basis was reported to the IRS, but I put the summary amounts in um, for the total sales price, the total cost, and then the adjustment, the wash sale adjustment in there. So then it does come up with the correct gain or loss on the Schedule D, um, but it doesn't give the IRS all the detailed information. My opinion is that IRS already has all that detailed information because the basis was reported to the IRS. So that's just my opinion. But you know, obviously, you make your choice on whether or not you should enter every transaction. Um, but that's Schedule D. Also, if you have any carryover amounts, they come down here. The lost carryovers. The program, if you carry from year to year, it'll pick that up automatically. Um, there's the other income adjustments and payments section, and this section this used to be the catch-all, and we would say, "Oh, you're doing line input, and you come up with, and I've got something that comes in, and I've got a other income for a game show winnings, or I've got my unemployment, or I've got alimony, or whatnot." And this, we would tell everybody, here's the cat. If you don't have a former schedule, go to this other income adjustments and payments. And it's the option 84 off of the forms and schedules menu. And it still has useful information here, but a lot of times, the all of this information here, I don't know if there's any other. There might be the estimated tax payments, might be the only place, but a lot of the other things here for the alimony received and the unemployment compensation, Social Security benefits, all these items right here on the Schedule 1 as well. And it doesn't matter whether you put it in here or if you put it on the Schedule 1. Same thing with the adjustments. These are all Schedule 1 items. So you could just go straight to the Schedule 1 and, put the information on there, or you can do the other adjustments and payments. Um, so if you don't have a former schedule, then you look at either, this is a good place to look to say, oh, this is where do I put that? Let me go to the other income adjustments and payments. Or, if you know it's an adjustment, it's going to go Schedule 1. If it's certain credits, then it'll go on the Schedule 3 or Schedule 2. So, but there is a little bit of a catch-all here on the other income adjustments and payments. Um, on the earned income credit, common thing on there, you do need to fill out this due diligence. I know some people complain that there's a lot of yes, no, yes, no. Um, but we have found that way back when the IRS first started penalizing people for not doing the due diligence, um, I think the penalty, what's it up to, about $550 now? I don't know exactly. I started at 500 and it goes up a little bit every year, but that's per incident. But if you hopefully go through the due diligence questions where you ask the information and you check the boxes on there, and then of course if there's additional items, we do have places where you can put in additional questions on there. Um, I haven't heard of I haven't heard of people getting in trouble with with the due diligence requirements. And like I say, some people we've had some people that complain, and we did make a little bit of shortcut things on some of that on the due diligence, where we have the option is once you key it in for one dependent, then we have the option to carry the information from that dependent to the other one. But of course, that's after you've made the decision that, yeah, the same criteria matches for both dependents. Or when the client comes in and you've keyed in the information from prior year, and you can say, yeah, let's recall the due diligence information from last year. So, and I think that that's valid, where you can talk to the client. You can say, okay, is everything the same? Nobody else is, the kids are still living with you. They haven't been somewhere else. They've been the whole year. Yes. let's go ahead and recall the due diligence information from last year. So uh, carries it over. Other than that, the EIC will carry the computes the information. Due diligence is probably the only thing that works on. There is one situation on the. Well, I don't have. Yeah, that's pretty much. Um, pretty much what we want to cover on the earned income credit. Um, and then we get to that other section. So we've done the tax return, input the income, the deductions, the credits, and whatnot. And then we get to the summary menu. So the summary menu is where you finalize everything up. So here's the final summary menu here. If you have multiple states, you can have all the states on there. Here's where you add different states. So, and it doesn't matter. We have what we call a primary state and then secondary states, but there's really no indication that one state has any preference over the other, whether it's in the primary state slot or the secondary state slot. It just if there's only typically you only have one state, so we automatically assume that the state that you're going to do is the state that's is the state abbreviation that's on the front page, but may not be. So you change it to go into the state. Um, the off of this menu, let me see. Yeah, off of this menu here, you can look at some summaries. They're the display summary, the detail, the prior year comparison. Oh, and I've got an old menu. Sorry about that. But we do have oh no, it's not. It's right here. The calculation log. This calculation log is a great tool. So if you go in there and you do a return and you look at it and you're like, hey, it's not giving me a certain deduction that I think I should be getting. Why isn't it doing that? Not a bad idea. And it'll show little bubbles here if there's note things on there. So if you click on this, there's a good chance that it may explain why, like, oh, your EIC was disallowed because you had investment income that was too high. Or whatnot. And so the idea of this calculation log is it would tell you certain things of why it's not computing you know the common things that might come up where you go, this doesn't look right. If you're getting up with a calculation, you're like, I'm not sure why it's not doing this calculation. Check this calculation log to see if it has. Sometimes it'll have the explanation as to why it's not, why you're not getting a certain deduction or get a certain credit. Um, the summaries, we have this basic summary which has the federal numbers and the state numbers. Um, then we also have like I talked a little bit about the states. You do a state return. One thing on the when you carry over, when you carry into the state, the first time you do a state, it's going to carry everything over that can typically it'd carry. If you go back into the state, it'll ask, do you want to carry or don't carry or zero out, zero everything out. So the carry will recarry things. So be aware that if you go into a state and you make certain adjustments on that state return, if you go back into the state and you say recarry, if it's an item that originally got carried from the federal return, it's going to recarry those numbers. And it may, in some cases, you do want it to carry because you've made a significant change on the federal side and you need to make that change reflective on the state. But then it also could be that you just need to get back in there to put in maybe direct deposit information. Nothing else changed on there. So in that case, you might want to say, don't carry because I don't want it to trump on top of any adjustments that I may have made. So that's why it'll have the question on there. And that's what it's for. So sometimes you definitely want it to recarry to refresh everything on the state. Other times you say, no, don't carry because I don't want it to trump on top of manual adjustments I made on the state. And then if for some reason the state's way out of whack, which I don't know that there's any much use for this, but if the state for some reason you're just like, wait, the states I've made some changes here and there and I'm way off. I don't know. Let me just start over on my state. You can say zero out. zero out this what I zero out whatever I had on the state and just carry the new information, and then it'll do that, clear it out, and then it'll recarry. Then you start fresh from that on doing the state. Um, when you're ready to e-file the return, you would go off of the summary menu back here. Here's this e-file button, e-file information. And so when you go to the e-file information, this is where it's going to indicate whether or not you have the federal status. So if, in this case, I guess I took a picture of one that got rejected, but this will typically say, it'll say pending. And then when you print the 8879, or if you create the PDF for the 8879, then it'll change this to transmit. Once this is at transmit, then this button right here, the A to A e-file, which is you're going to e-file this return to the A to A. It's the e-file system. It's going to go right to the IRS. Well, it's going to go through our system to the. It's going to be transmitted to the IRS. And it would have, if you wanted it for some reason you didn't want to send the state yet, you could manually change these. But typically, you're going to go in here, and after you print the 8879, then it'll mark your Fed and all the states to be transmit. And then when you hit transmit, then it'll send it. Um, and then it'll show you a screen of what's going to be sent. Has a little summary of the has a summary of whether or not you can do direct deposit, whether you're going to do a bank product, and it's a good time to good thing to review that information and to before you actually hit the send button. Because once you send it, then it's sent. We can't stop it. It's automatically going to go. Um, the pin there's defaults in the default settings to have the program automatically create a pin, which is highly recommended. Just let the program assign that. A lot more and more people are getting the identity protection pin, so there's the input for that here on this screen, and it's also input on the basic information menu. There's under the telephone numbers, there's a place to put the identity protection pin, and so you put that in. If you're doing bank products, this is where you get into the bank application to do the bank product on this return. And there is the 8453 attachments, but I think that's pretty much obsolete, where there's just hardly anything that you're going to attach to the 8453. This is used to be where you'd mail that in, but now you can do attachments. You can do e-file attachments or PDF attachments. So if you want to send a document, I don't have a picture of that screen, but it's just down below this where you can have e-file attachments. So you can attach a PDF to the tax return, and then it'll e-file with the return. So that could be, maybe you want to send copies of brokerage statements or something like that, or you want to send a note, a message along with it. Um, the Don't know how much it really gets looked at on that. There was a common situation on the e-file that comes back as a reject. Common reject on e-file is that if you don't include the 8962, which is the healthcare reconciliation form, if you have health insurance through the exchange. The For California, it's covered California, um, but but then you have to reconcile. You have to fill out the 8962, and if the IRS thinks that you should fill out that form, then they will reject the return. And it comes back and they tell you to either include the 8962 or attach a statement. And I had one where they didn't need to do the 8962, and I attached a statement on that and I sent it, and then the client got a letter, and then in response to the letter, we mailed them back the exact same thing that I put in the attachment, and it went away. So I don't know. Unfortunately, they didn't look at that attachment. So, but the it does get sent with the return. So if somebody's going to review the return, there's a good chance they will look at that. Um, I think I think that's what we want to cover in this seminar, going through the tax system. Make you aware that we do have on our website, we have a lot of the old webinars or the messages that we've had, different tutorials. If you can go onto our website and go to the technical support and training, and you can review, like Catherine talked about, the different seminars that we've already had, and you can watch those and see those. And I think that's what we wanted to cover today. Thank you very much, and looking forward to a good year. Catherine had mentioned that things are a little bit slow, but uh, will IRS started their testing for e-file. They started that right on time, actually a little bit earlier than normal. So that was good, but the states have been a little slow on getting information out. And of course, the biggest secret that they have is when they're going to actually open up e-file. Um, and so as soon as we know, then we'll let you know. So anyway, thank you very much for attending our seminar, and I guess I'll turn it back to you, Catherine. Thanks.
Thank you, Mike. A wealth of information as always. Our next session will begin at 1 p.m. Pacific time, and that will be the entitled Did You Know? And it will dig a little bit deeper. I know Mike gave a really great broad overview of doing a return, but it will dig a little bit deeper about how you can use some of those tools that he may have touched on, but not gone into full depth. So um, join us for that. Register for it if you have not already registered for it. Again, 1 p.m. Pacific time. We will do a drawing for the $100 Refund Advantage gift card winner, and that will be posted later. Um, Thank you so much for being with us today. We appreciate you as client. We appreciate the time that you took to really understand the program and learn more about, many changes that are coming up this year. So, have a great day, and hopefully we'll see you at 1. Bye.